What's going on, guys? Hope everybody's having a great weekend. I'm back today, Saturday morning, October 6th, for a quick stock market recap and preview for next week and going forward. Um, this is going to be very important this week. There's a lot of pressure built into the markets, especially after last week's pullback. There are a few levels I want to go over and look at just so you guys have a quick awareness of what is going on and how this market is sort of laying itself out. So I have the SPY S&P 500 ETF pulled up here. All my, key support and resistance marks are marked on the daily. As you see, the double top sort of failed here, and this is going to be important when you look across the board. I'll get into that a little bit later. But failed double top. You can tell that the momentum has really started to drop. MACD is starting to drop into the red here. We failed to, essentially go green in the momentum. That's why this rally sort of stalled out. And we pulled back into nice support from this previous top back in January. It took us 10 months to build back up to that top. And you can see now it's holding its support, or it did, I should say, Friday, but barely. It stretched itself, but it eventually held into the close. So that's very important going forward. But there are a lot of things pointing in the opposite direction here for me. Obviously we've been in a trade war that is built into this market. You can now see the 10-year Treasury yield is increasing. The Fed's having problem with the rates, and it just keeps increasing. And when the rates increase, it's not good for the stock market. It puts a lot of pressure on the dollar, and you'll see that ripple effect throughout the market. So I'm going to take a look at my indicators here on the SPY and let you know what I'm personally thinking. As you can see, MACD is red. There is no real momentum here. If anything, it's going down to the downside. You could tell in some serious pullbacks, like what the MACD was able to go down to here, down past 3 on the histogram. And even here again, we haven't had that since these major pullbacks. This certainly has room to run if volatility increases. And that's something we're going to have to look forward to. But as of right now, I take the market one day at a time. We did hold this support area, so we might have a bounce into tomorrow, maybe Tuesday. We'll see how long that lasts. But overall, the indicators, you can see, you could zoom in on the my moving averages here. The slower ones have crossed. The 5 EMAs on the bottom now, pointing to the downside. That's not good for the bulls. That's a downtrend could be starting here, coming out of a neutral trend. Neutral trend is when the moving averages are flat. If we come out to the downside, there's a lot of pressure here, and there's not much support until you get down to this 280 range. That's a fairly wide drop on a SPY. 10 points. It's it'll do its job, and then you have a lot of room to go down here. So personally, until these indicators sort of select themselves to find a consolidated base, I'm going to be very careful with my long positions just because of the overall weakness that we are seeing, especially after this double topping formation. This is the SPY, and now I'm going to go over to the other 2 indexes, which I do keep my eye on, and one will be the Qs, which is the NASDAQ Tech Index. Tech is very important. As you can see, similar double top here. I have that marked for you guys. Same sort of situation with the moving averages. You can see they're coming out to the downside. MACD's red, just crossed, and we're breaking through this base. I have this top base here at 180. I was letting everybody know in my chat 180.75. If that breaks, look at how far it stretched down that Friday session. It stretched and it rallied back up a little bit, but nothing crazy. It didn't close above support. So tech is very important to this market, as you all have known that this bull market has been ran and been very dominant in the tech sector. So tech's going to be very important to see what the overall market does. I do expect tech to continue bleeding until we find support. The next support is down at this 175 range. Obviously, you have small areas. You could go through and mark all these supports all day. That's what I do, and that's what I trade in intraday. But you have a base built from this previous top at the 175 range. So it is very possible that we pull back into those areas. And if this uptrend fails, that there's a lot of room to go to the downside. We haven't really seen a downtrend. Look at this. It broke. So we can start a new downtrend and enter a bear market very easily, just simply based off the technicals. Maybe the economy is not in too horrible shape, but that doesn't necessarily mean anything with the stock market. We'll have to monitor it one day at a time, as I always like to tell everybody. But that's just something to keep an eye on. And look at these levels. There's a lot of room to drop, so you got to shift your focus. Look at this volume, the selling volume that came in these last 2 days, especially in tech. You're gonna want to position yourself and change your trading strategy. Maybe if you were just a long bias trader, you got to switch it up. You got to be able to make money on the downside as well. Um, it'll be very important to your long-term success. So next, I'm just gonna go to the Dow Jones Industrial Average, similar topping formation. You can see this never really rallied back and got back to its highs. It failed at that level as of right now. From that January drop. And we double topped here and we're pulling back. So there's enough room to drop to this next support. Two support lines I have measured at 26 and a quarter, 26 163 to be exact. And then down to 25.80. There's a lot of room to drop here. Same with the indicators. You got to look at that too. This might be entering a neutral trend that isn't necessarily breaking out to the downside. As you can see, the shorter moving average is still on top, but the MACD just crossed and it is now into the red. So that's something I'm definitely keeping my eye on. I just definitely think that there's a ton of pressure built into this market right now. There's a lot of overweight stocks. I've been saying this for the past month that the setups haven't been there ever since the earnings report from Facebook, Netflix, everything that has been a previous leader, even Tesla now. All their chart setups are broken down. They're not leading the market anymore. The two leaders that were leading the market, Apple and Amazon, they're both looking like they're breaking down as well. Amazon in you know in first place. If you want to go to that and check out the Amazon chart, you'll see the same situation. Um, it's just one of those things where all these stocks that were leading the market are now breaking down, and you know, look at this chart. It held support, but the moving averages are lower. MACD's lower. We're entering into a bearish trend. We're gonna have to see where we find support. Maybe we could get a bounce on Monday, and that'll be great for the bulls. We'll have to see. I'm being patient. I'm telling my members to be patient. I think everybody else should be patient, but definitely capitalize around these support resistance areas on the indexes. Day trading these levels is very beneficial when you're trading options. If you don't know how to trade options, join me in chat. Sign up for a membership. Very cheap, $14.99 a month, and I almost guarantee you'll return that on just a few trades. So anybody who is interested in that or further detailed analysis, you got to come check out the chat. I go through this every morning, and there's a reason for it, and that reason is simply because studying the overall markets makes you a better trader. It lets you understand what is going on actually, and not just in these small niche markets like small caps. Um, it's very important. So with that being said, I hope you guys all have a great weekend. And I look forward to talking to you when the session bell opens Monday at 9:30. Thanks, guys.